Okay, so welcome all. Welcome to Financial Fitness Program. My name is Samir Bapat, and today we are going to learn about candlestick patterns. Candlestick patterns is nothing but the story of fight between bulls and bears. Okay, before we begin the program, how many of you attended the program on Saturday? This 4 to 5 hours program on fundamental analysis and technical analysis. Can I have yes if you have attended previously, and then also say yes. So, what we did was sorry, what we did was we learned about basics of charts, and then I said we learned about the line charts. I said there are around 30 topics in technical analysis which we have to learn one by one to be a good decent technical analyst and to earn money consistently in stock market. Now today we take one step further, that on Saturday we understood what is a line chart. Simple closing price and then date, and then we had a line chart. Today we are going to take one level higher. We are going to understand candlestick patterns, plus we are also going to understand the meaning of each and every candle. Once you built upon your knowledge of this candlestick patterns, it becomes very easy to trade and to judge and earn money in stock market. So let's start. Before we begin, I would like to thank you all for your time. I know you have busy lives. You have a lot of other things to do with office starting. You are navigating with the traffic and all. After that, still you chose to be here. I'll make sure it is well worth your time. So let's start. Why are we learning candlestick pattern or technical analysis? Of course, to earn money. matlab, there is no other reason behind learning the technical analysis or whatever, spending this time to earn money only, right? But we are learning, that is one part. Higher goal is to earn money. Then we are learning candlestick patterns to understand the language of charts. Now I'll tell you one thing why we are learning technical analysis. Just one more slight deviation from the topic and why we are learning. Now you see this Aditya Birla fashion. I had posted on my Telegram that okay, there is a around 4th of January when the Aditya Birla was somewhere here. This I'll draw the line. When I posted the chart, I posted this chart somewhere around here. Okay, so around 4th of Jan, I posted that the Aditya Birla fashion industry is likely to go up, and it is likely to go up till here target. Did I get it in the dream? No. Did someone tell me? Am I a very powerful person who knows insiders in Aditya Birla? No, not at all. I am just a person like you and me. The difference is I know some technical analysis. What is technical analysis? Analysis is the charts. The charts start speaking to us. It's the language of charts. Once the chart starts speaking to us, we can also predict. Why I'm giving this is, typically after this I had posted in Telegram also, Aditya Birla was tying up with lots of companies, and news started coming afterwards. Charts started telling us beforehand that the price is likely to go up. That is the power of chart. Even it before it comes in the news, even if before the analysts tell us okay, this is the type going to happen, the charts will tell us the story of the price action. We have to understand the price action, and then we can take action and earn money. So it was nothing that someone told me or something. I also studied chart, and I was able to do a prediction. It's only a prediction, high probability. Same thing we are going to learn in chart. What we studied on 15th was line chart. We studied line chart. How the line charts are drawn. Just a recap. Uh, line chart is drawn by drawing the close price. Like I told, every day morning the market starts trading, stock markets, there is a trading for Aditya Birla fashion retail, for example, will happen. It will open at certain price, go up, go down, and close at certain price. Whatever price it closes, that price is picked up from National Stock Exchange by this trading view software. It is plotted for you. This is the closing price, and with the relevant date, the line chart is plotted. So we studied on Saturday how the line chart is plotted. So I'm assuming everyone is comfortable with the line charts. Can I have yes from all of you if you are okay, comfortable with the line chart, so that I can go ahead with the candlestick charts? Yes? Okay, great. So we are comfortable with the line chart. We did this in our childhood, but what we did not do in our childhood was candlestick patterns, because our that time candlestick pattern was not required in our studies in the childhood. So what happens is we are going to study about candlestick patterns, and it's a very interesting pattern to start with. Now, candlestick pattern, brief history. It was not developed 20 years, 30 years ago. Candlestick patterns were developed in 18th century, somewhere 1860s or something like that, in Japan, by Mr. Homa. He was a rice trader. He was a very intelligent fellow. Of course, he developed candlesticks, so he has to be an intelligent person. So he was trading in rice futures. So you would be surprised to know future and options. The derivative segment was even traded 400 years ago in Japan. India does not have a recorded history, but I'm sure we were also trading in futures and options even 4 to 500, 600 years ago in India. You must have heard, if you have some business friends, they will say Vaida system, right? Vaida system is nothing but futures and options, which was traded in India for a long time. Mr. Homa was a rice trader. He used to trade rice, and he found a pattern. He found that there is something which you can infer from the open, high, low, close price of rice trading, what is happening in the rice exchange. And then he started developing the pattern, analyzed, and he wrote the book. This book, Candlestick Pattern, was not known to the Western world till recently, till 1990s or so, roughly. uh, Western world was not aware about the candlestick pattern. The candlestick patterns came in 1990s almost, in Western world, in the US and Europe. And it's only 200, 300 years that we are using this candlestick. Now it's a very integral part of technical analysis. We all study it and take advantage of it. So it's only 30 years or so it is being used, but it's very powerful. So this is yin and yang. Anyone knows what is the meaning of yin and yang? What is yin and yang? Don't tell me this is Doordarshan symbol. If you tell this is Doordarshan symbol, I know you are from 80s, because in 80s we used to see it every day. Doordarshan symbol. Yes, negative and positive, evil and good. So everything in the world has a balance, male, female, right, wrong, good, evil, and everything. So it's a Japanese symbol of balance. It's a Japanese symbol of balance. Why I am showing you this is, even candlestick pattern was developed on the similar lines. It was developed on the lines of balance. Okay, so whatever theory, if I'm telling something for price to go up, the same theory also applies for the price to come down. Okay, so it's like a opposite. So if we are talking about something, we'll have the equal and opposite force in candlestick patterns also. That is how the Japanese have defined it in a wonderful way. So let's deep dive first how the candlestick patterns are drawn. Candlestick patterns, candle is drawn, not patterns. First of all, the candle is drawn by 4 data every day relentlessly without having any sick leave, casual leave, or paid leave. Market will open when it has to open at 9:15. It will open at 9:15. The shares, each and every share will have opening price at 9:15. They'll start trading. Then in the day, like I have shown in this Maruti, this is the daily chart. So it will open here, the price will go up, then it might come down, and then again go up, come down, and at 3:30 it will close. So effectively it generates 4 data points. One is the open price, whatever was the price it opened at 9:15, that is the open price which is of our interest. Then high price, what was the highest price it went in the day, that is the high price. So during the day full fighting is going on, so it will go to the highest price. Then it will go, what was the lowest price it went throughout the day, and what was the close price at 3:30. So 4 data points. How many data points? 4. So 4 data points are there every day, open, high, low, close, open, high, low, close. Every day the market will give, this is the minimum data it will give every day. Homa used this data very effectively, and he developed candlestick patterns. So how the candlestick is drawn? Now, if whatever is the open price and whatever is the close price in the evening, he will draw a rectangle, open price and close price. Between those two values he will draw a rectangle and fill it with a color, and whatever is the highest point from there, from that body, he will draw up and down with a line that is called wick. So open, if the close is higher than open, then the color of the body will be green. If the close is lower than open, then the color of body will be red. Now let's take one example quickly. Let's take okay, now let's take ABFRL only. FRL only. Okay, Aditya Birla Fashion. Okay, so now here the open was 313.45. Can you see this NSE website in front of you? I have opened the NSE website. This is a National Stock Exchange website, most authentic website to get the data from. So you should all know this nseindia.com. This should be bookmarked in your browsers. Okay, so Aditya Birla Fashion open in the morning 9:15, it opened at 313.45. So it started trading at 313 rupees 45 paise. Then intraday high and low, it went till the highest point was 318.70, lowest was 307. I will make it bigger, larger here. The highest point it went to 318.70. Okay, and the lowest point during the day was 307.85, and finally it closed at 310.10. Now close was at 3:30. It traded at 310.10. In the morning it opened at 313.45. Did the price closed above the open price or below the open price? Did the close, was the close price below the open price or above? Below, right? If it is below, then the candle will be red. The candle which is drawn for Aditya Birla Fashion will be red. So let me convert it into red candle. And as you can see, this is the candle for today, 18th Jan 2022. The candle is drawn as red because the close was 310313. So this is 310313. A rectangle is drawn, colored with red color, and from this point, highest point it went was 318.70. So from this rectangle till 318, one line is drawn, that is called wick, upper wick, and from this body till low, a wick is drawn, which is called lower wick. This is how candle is drawn. This is what is I am teaching is how to draw the candles. Now we'll, after in a while, we'll come to a story. Now this day on 13th Jan, what happened? If I say, okay, 13th Jan, where my mouse is, where this mouse is, when you can see the mouse, okay, where it's at 13th Jan. 13th Jan, what happened? What was the close price? Was it higher or lower? Did it close above the open price or below? Close is higher than open. So it opened at this point, at it opened at 303.50 paise. It went up, it went highest point is 309.40 and then closed at 308.45. Great going. So now it makes sense, right? Now it makes sense. If you see, okay, Shivan Mittal is saying, can you explain again? Definitely, I'll explain again because it's a very foundation. Everyone who joined late or have not understood, please pay attention again. Candlestick patterns are drawn based on the open, high, low, close value of the day. If close is closing at 330 is higher than open, then a green candle is formed. That the close price, open price, a box is created between close and open. It is shaded green. It is seen like this. Whatever the highest point during the day, it will go. It will high and the lower wick. If the close at 330 is less than opening price, the candle will be red. It's a story. Candlestick candle is a story of that day, what has happened that day. Okay, so now if you see, now can you, how many of you who are starting, who are beginners, are you able to make out now with the candles? And if you move your mouse, are you able to make out that on which day the price went up and which day the price went down after opening? It has given a new dimension to the picture, right? It has given a new dimension to the picture. Acha, these days it went down. So 1 2 3 4 5 6 days after opening it went down, then one day it went open, then again here also 3 days. So now suddenly, by after knowing this, having this knowledge, you are empowered to see the story for each day. Also within this story, there is a story what happened on 4th Jan, what happened on 5th Jan, what happened on 6th Jan. There are small stories which combined together make a big story. So now let's dive into the smaller version. Okay, so far so good. Can I have yes from all of you if it is you're okay so far? Yes? Okay, great. Now, okay, so now we have red candle, and then since I said we see, we have moved to the colored world in charting system. Also, we moved to the colored world some I think 10 12 years ago. Before that, the candles were drawn in black and white only in charting softwares only. So the in books you will find the candles as a white and black. If you see a white candle, anytime if you see a white candle, then the close was higher than open. So white is equivalent to green candle and black candle is equivalent to red candle. The close was less than open. Okay. So again, this is the body, upper wick, lower wick, open, close here like that. And normally now everyone is making green and red candle. You don't have to worry. In case you are reading some book, you come across a white candle equal to green candle, black candle equal to red candle. Just remember that. Don't worry, अरे ये तो out of syllabus आ गया. नहीं नहीं, ऐसा कुछ नहीं हुआ. It is like this only. Earlier, people did not have color pencil or so to draw, so they used to draw in black and white. Okay, so now candlestick pattern. Okay, candlesticks, I would say candlesticks, we have to imagine as a bulls and bears fight in the market. Okay, now pay attention. The story begins now. Okay, before I explain you the fight, how many of you played tug of war? Tug of war, that you'll have two teams, one rope, one line. Okay, one team will pull from this side, another team will pull from this side, and whichever team takes away another pulls with the more strength. Rassakashi, Rassakashi. In Hindi we say Rassakashi. I don't know the name. So tug of war, we played all right. We saw it and we played also. So it was interesting. So we'll pull. Everyday market is a tug of war between bulls and bears. Now, who are bulls? Bulls are those traders or investors who are very bullish. अभी बुल बोला बुलिश बोला मतलब bulls are those traders or investors who think that the price of the share will go up and they are ready to pay higher and higher and higher and higher price today because they think that the price is going to go further up tomorrow. Okay, Harshad Mehta, right? Correct. So he was a big bull. Big bull because he was ready to pay higher and higher and higher price for a share, and he thought, his idea was that the price will go up and up and up, the company will create valuation and the price of the share will go up, so they are ready to pay higher and higher price today for a getting a higher price tomorrow. These are bulls. Okay, this is how bulls think. They are ready to pay higher and higher and higher and higher and higher price today. Everyone okay? Who are bulls? What is the thought process behind bulls? They are paying higher and higher and higher price today so that they buy it and hold it, and tomorrow when it goes up, they will sell and make money. Okay, fine. Okay, so Satish Bansal, I also didn't know why bull it will pull up and bear will pull you down. It was in 1992 scam only. I also heard there only. I was not knowing the logic also. Okay, so great, Satish Bansal. Okay, great. Thanks for refreshing. Okay, so bulls, everyone clear? Bulls are those who are enthusiastic about the market going up. They are very, very enthusiastic and they are ready to pay higher and higher and higher and higher price to go up, right? Ready to pay means when I'm saying ready to pay means if someone says share is available for 310, they'll say okay, de do. Someone will say okay, I'm selling for 311. The bulls will say okay, give it to me, I know it is going to go up. Someone will say 314, they will say okay, give the share to me, I'm ready to buy, it will go up further. Someone will say 315 rupees, bulls will be ready to pay 315. That is what ready to pay means. They are willing to pay, they are ready to pay higher and higher and higher and higher and higher and higher price. Same way bears are, they are a bit pessimistic at that given point of time about the share price, and they think that okay, the prices might go down tomorrow, better to sell off and book the profit right now. So bears will be selling off their shares and booking the profit, and they think that okay, the market has gone enough up and it is likely to go down. So bears will be little pessimistic about the near future and they will be thinking that the price will go down, so they are ready to willing to sell at a lower and lower and lower and lower price. That is what the characteristics of bears is. Everyone okay? Can I have yes from all of you if you understood who the bulls are and who the bears are? Because these are our two teams, right? And people interchange between the team, right? It's not that once a bull person, you'll be always bull. They have to book profit and earn money, right? No one is permanent bull or no one is permanent bear. People change their teams also, but on a given day, people are in the same team mostly. No. Bulls are the buyers because they are ready to buy at a higher and higher price. Bears are the sellers in the market. Okay. Okay. So let's go ahead. Okay. Now I want every one of you to pay attention. Pay attention because now we are trying to understand the candlestick patterns. Okay. So now what happens is, see, you have to imagine. Now, going forward, you have to imagine. You have to feel it. Okay. Now you have to feel and you have to imagine what is happening behind the scenes, because at the end of the day or after a few days, you'll be seeing only the candle. But after looking at the candle, you should be able to imagine, okay, what might have happened that day. Okay. Ready? Hello, guys. Here. Okay. Ready? So let's start. Now, I want you to imagine two teams. On the left hand side, you have bulls. On the right hand side, you have bears. Okay. So there are two teams, tug of war, left hand side bulls, right hand side bear. And what happens is in the morning, the stock market opens and the bulls keep on buying, and the stock goes up. So there is hardly any gap between open and low. The price does not go up. As soon as 9:15, ding, the bell rings, the stock market bell rings. The bulls are so strong, they keep pulling the rope, they keep buying, and in 3:15 the market close at the high. There is no wick on the top and bottom. This is called Marubozu candle. It's a very strong bullish. When you see such candle, you have to imagine that the bulls were winner. All bears had no chance. The bulls only kept on pulling the rope towards their side and took the entire game on the that side. So they kept on buying and buying. Everyone okay about this candle? If you see this candle, what has happened? Bulls were winners through and through. They did not give a chance to bears. They just kept on buying, and buying. Okay. Now, second candle. This is a normal standard bullish candle. In this simple, the market opened at 9:15. It went down slightly. So again, bulls and bears, bulls on the left, bears on the right. So initially the market opened, the bears pulled the rope on their side a little bit. So the price went down till low. When it went to low, the bulls started pulling it. They started buying. It went till high, then bears pulled it little bit down and it closed at a very high. So you have very small wick on the high and low, but still the day was more by the bulls and they were able to sustain buying till the end. Okay. Okay. Now there's a lot of questions which are coming. Okay. I can see a lot of questions. What I would suggest right now to everyone is, don't worry, don't get like, don't worry too much, don't think too much about what is happening, but they must be buying for having profit. Just enjoy, sit back and enjoy. how the pattern is reflecting, right now we are studying the language of charts, how the charts get plotted, right? Right now we are learning A B C D E. Few people know how to form sentences also, or few people are worrying how to form the sentences. Don't worry, just sit back and enjoy. Don't get I know you are thinking little bit ahead, excited, which is a good thing, but right now just relax and enjoy and understand each and every candle, what candle means. Tomorrow we will be studying the combination of candles and will be taking the trading decisions. Okay. Surbhi, but okay. I'm not explaining again the two candles. I know you might have joined recent just now. You can go ahead and see the recording. Okay. Okay. So just enjoy, just enjoy. Okay, don't worry. Okay, why? But they are doing. Just enjoy. If you are seeing a green and candle, be with me. Okay, there was a tug of war. The bulls kept on pulling, and they won the game that day. The green candle indicates the bulls were ready to buy at a higher and higher and higher and higher price. They picked up everything which bears had to offer, and a green candle was formed. Everyone okay? So far, so good? Just absorb the information. This is our beginning, this is our foundation. Okay. Now, the third candle is hammer. Hammer is again, this is in third in strength. Okay. When you see a hammer, something like that, this is also bullish. So, what has happened this day? The price opened at this level. Okay. The price opened at a price. After the price opened, okay, there was a tug of war again. 9:15 game started, and the price opened at the open price for the share. The bear started winning the game. Okay, the bears pushed the price down. They kept on pushing the price down. They kept on selling, but after a point, when it reached to the lowest price, the bulls took over. They started buying again, and hence the price again went up all the way up. It crossed the open price and closed higher than open. This is how it was. The battle was fought on the day this hammer formation is seen. Okay, what does it mean? When the price opened, the bears were selling. They were selling at a lower and lower price. The price went down till it touched the lowest point, and from that point the bulls took over, and they again started buying, and they pushed the price up, crossed the open price, and it closed. Normally such patterns are formed when the information comes midway in between of the day, like maybe 10:15, 11 o'clock, 11:30. Some information will come. Okay, there is some view change in the afternoon. This view changes during the afternoon from the traders who are bulls. Their view changes, some input they get during the market hours, and their view changes. That is point number one. If you see hammer, the second inference can be it has reached to a certain point where they find the value in the during the day. The price goes to such a level where they start finding the value in the share or the price what it is available, and again they start buying and pushed up. So this is a hammer, very good indicator for turnaround. Now the third pattern is the spinning top. The third pattern is spinning top. Now here what has happened is the price opened, it went low or it would have gone high, and again it came and closed at the same level. This pattern is pattern of indecision, where both bulls and bears are very confused that day whether to take the price up or to take the price down. This is a state of confusion. These are the turning points. One more pattern I'll show and then I'll take you to the chart. The last pattern is inverted hammer. This is the weakest bullish pattern, we can say, where the price opened, the bulls took it up till the highest point, and then bears took over. They started selling, and brought it down again somewhere near the open price. So this is an inverted hammer. This is bullish, but it is the weakest. It's a beginning of a reversal. Now, if you see, what I want you to do is, I want you to open your charts. See, now this is a normal red candle. This will not impact much. So where we have to see these patterns, typically this fight is interesting at support levels. We'll come through the support levels. What are the support? Oh, sorry. Let me change the. So now these patterns are very, very important. This is a doji pattern, right? Here, when you see, you can see now doji patterns. See, these are all the state of indecision. When you see dojis at the top or at the bottom, it has higher significance. We'll come and study about it on the Thursday. So now you can make out whatever I have told, the tug of war between bulls and bears. You can go back and now see, make out the difference between each day, what would have happened. Like here, it opened at this place, it went down, the bears took it down, and then it turned around and it went up. So now, with this simple logic of bulls and bears, tug and war, I would request you to go back and look at each and every candle. We'll go through the bears candles also, and then on Thursday we'll be using these patterns, these combinations, and we'll come to know how to earn money. So let's go through the bear pattern. For how many of you now it is making more sense? For how many of you now these candles are making more sense? The fight between bulls and bear making more sense. Now this chart is making more sense, much more. Great, great. Now let's go through the bear. Now, like I said, yin and yang, right? Yin and yang. Now, what happened on this day when you have a candle like this? What would have happened this day? Guess what would have happened this day? What between the fight of between bulls and bears? What would have happened? Bears won, right? Bears fantastic. Bears won. Complete bearish. Bear took over the game. On the word go, as soon as the market opened, sell, 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 sell. When you see such day, there is a likelihood that the next day also it is likely to go down, right? If the bears are relentless, you can also add the volumes with that. Volume will add sometime later, but at least if you are seeing such candle like that, initially it is better to stay away, better not to put hand, right? If the bears are selling, and if you see a red candle, better to stay away. Let it settle down. Let them settle down first. Let bears calm down. Then we will buy the sometime. This is a normal candle. Again, the bears were relentless. They opened and that kept on selling. If the close is lesser than open, it will close at a lower price. What would have happened this day? Hammer, inverted hammer, bearish. Just try starting from open 9:15. What would have happened till close? Good, very good. Bulls tried to pull up. Very good. Bears leading. Okay, go step by step. Okay, go step by step. Prices down, but beer won. Yes, very good. So it opened, bulls took over. They took the price up, 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 up till the highest point. Then beer started selling the stock and it went down and it closed below the open. Bulls were trying, but last bears won. Fantastic, right? So this is how the tug of war happened when inverted hammer occurred, right? Bulls tried to take it up, but they did not succeed. The bears took over. Again, this is a spinning top or a doji when both bulls and bears were undecided कि करना क्या है. So you'll see such patterns, and then this is hammer bearish. Again, this is the weakest bearish candle. Okay, if you see, that means the strength of bears is reducing. If you see, normally this will come at the end of the downtrend. Hammers will come at the end of the downtrend. Inverted hammer or inverted hammer, green or red, will come at the top. Hammers will come at the bottom. Okay, so this opened, the bears kept on selling, they sold till low, then again bulls took over, and so next day it is likely to go up. So you can take a snapshot of this if you want for a ready reference. It is available on the Google, on Google and all also. Bearish candles, bullish candles, and doji stars. I hope now with this information you can go back. I'll upload this video today. I would request every one of you to go back and have a look at the chart, right? I hope everyone has created a free account on TradingView. Can I have yes if you have created a TradingView free account? Yes? Okay. Go back to TradingView. I'll also share the link how you can use TradingView. Okay. It is very, very important to learn how to use TradingView. So you can use TradingView and go and check these charts and how to use TradingView, and just go and see what was the story of bulls and bears, right? What happened this day? What would have happened this way? What? So try to speak with the charts. Once you start speaking with the charts will tell you well in advance what is going to happen, when the markets are going to go up, when the markets are going to crash, and you will know in advance. Okay, so now with this we come to the end of session today. On Thursday I'm going to use the pattern combinations of 2 days, 3 days, 1 day, and I will share with you how to earn money by knowing the pairs, like 2 days pattern, combination of 2 days, combination of 3 days, what inference you can draw, and how you can earn money by knowing the patterns. Okay, so if anyone has any question, I'll pause here. If you have any questions, type in your name. I'll allow you to unmute and you can ask your questions. If you have any question, type in your name. I'll come to you so that you can unmute and ask me the question. Okay, yeah, Praveen, go ahead please.
Sir, I have one question. This is not regarding today's class. It is related to Sunday class. When you were explaining graph on this TradingView, you took a example of 50 days DMA to buy and sell share actually. Correct. So I wanted to know what is the rationale behind taking 50 days DMA, not like 30 days or 20 days or any other day, like that was one genuine question I had, but Sunday it was too late, so I didn't ask. Actually.
Sure. See, the reason why I got your question, I'll divide your question into two parts.
Sure, sir.
First of all, this moving averages were being used some from 70s onward, 1970s onward. And if you know, the computers have come only in after 2005, 2006. Agreed? We all
Yeah.
got access to computers and all after 2006, 7, something like that. Easy access. Before that, even the calculators, if you see, calculators also came in somewhere around 1985 and all like that, right? The
Hmm.
Casio calculators, if you remember, we had those Casio calculators made in Japan for calculation, simple calculation. Before that,
Yeah, yeah.
we used to do mentally.
Mental
Now
calculation,
it
correct.
is very easy to divide anything by 10, 50, 100, right?
Okay.
Rather than dividing it by 12.5, 22, or 66 like that. Agreed?
Hmm.
So that was the first reason why people in 1970s, 60s were using 10-day moving average, 20-day moving average, because it was easier for them to divide by 10 and
Hmm.
keep adding. So that is the history behind rounded numbers moving average.
Okay.
So they had 10, 50, 100, 200 were most popular. Now why 10? I'll not go into 10. Why 50? Now coming to your base question, why 50?
Yes.
50 normally for as accounting purposes, they like every quarter they will announce their results. Every
Hmm.
company will announce their quarterly results for long duration now. Now, in a month, there are 30 days, and roughly in a month, there are 20 trading days.
Share.
Saturday, Sunday removed, 20 trading days.
22 approximately. Yeah. Hmm.
Approximately 22, some Holi, Diwali, something like that will come. So 20 we can say,
Yes, sir. Sure.
roughly. What happens is 3 months is roughly 66 days. Correct?
Sure, sir. Hmm.
Now 66, dividing it by 66 was little tough, so they
Okay.
conveniently they made it 50 days के, और 50 days का average के ऊपर है तो it's a bullish, नीचे है तो it's
Hmm.
bearish. So that is
Makes sense.
how they came to 50 days moving average, because they
Hmm.
were measuring the performance of stock basis every quarter.
Hmm.
Very long term, people went for 200-day moving average, where it was a year, like 365
Hmm.
days. If you remove 52 weeks, that is 100 days. So 260 days, some 10, 20 holidays, 250 days hona chahiye tha, but they took 200 days. If it is about 200 days, as a long term measure, it is a above
Hmm.
on a like it's a growth trajectory on a yearly basis. 50
Hmm.
days was quarterly basis. That's why they used 50 and 200.
Okay, so sir, a follow-up question on this. If we buy based on 50 days average, like if share price goes up from 50 days, we should try to buy it. So we are not we going to pay higher price because it might be, higher than 20 days moving average. So the
It is possible. See, what happens is in stock market, it is important to be successful more number of times.
okay. Mm-hmm.
है ना? So it is okay. We might lose some opportunity at a lower level. We might pay a higher price. It is okay, but it's a ease of trading also. When it is going up,
Confidence. Yeah.
you are pretty sure कि हाँ ठीक है यार एक 50 days का average है, right? It's not a
Uh,
small average. It's an average of 50 days, and the current price is above that average. So it has got strength. So many people have already invested. So ऐसा तो है नहीं कि
mm-hmm.
suddenly they will start selling. So it gets strength. There are
Hmm.
various methods of trading. This is one of them. I'm
Okay.
not saying this is the perfect one. I'm saying this is one of the. As we'll progress, I'll share more styles of buying and selling. This is one of them. So you can just enjoy. See, if you like it, you can use it. Further, more I'm going to share as we progress. You can use whichever you like that way.
Yeah, sure. I was exploring a few of actually charts
Ah,
yesterday. So I saw, I mean, your what you said, like 50 days moving average, it makes lot of sense, because as you just now you explained, no, because lot of people have already bought in that duration, so price is chance of getting stable at that is higher, and
हाँ, उतना समर्थन है लोगों का.
ha ha. So you may not lose money if you are
हाँ,
buying in 50 days price. So
Yeah.
at 20 days, the chances of losing money is more. So
More, huh? So the support is lesser.
yeah, support is lesser. Confidence is low in 20 days. 50 days, you get more
You have
confidence.
a decent 200 is very good, but 200 is for long term people. People who invest for
Yeah.
very long term, they go for 200 days.
So, so if we want to buy any share for a very long term, we should not look at 20 days, 50 days. We just look at 200
I
days.
would say change your chart to weekly and again use 50 day. 50 day I found is a good. So this we are using daily chart. If you want to go for a longer term, use a weekly chart.
Okay.
And but I believe, see, there are different ways of going for longer duration. Moving average 200, yes, 200 days you can use for a longer duration. Then don't use 50. If you're a long-term player, go with the 200-day moving average.
Okay, sir. Thank you, sir.
Yeah.
Very nice
Okay.
explanation, sir.
Thank
Thank
you.
you.
Great question. Yeah, Vikas, go ahead, please. Vikas Chaturvedi.
Yeah, my question is, sir, frequency of this candle should be refer daily candle during the day when we are trading, for example, then should it be 5 minutes, 10 minutes, 15 minutes, or
Depends on what you are trading. Like if you are doing intraday, then you should look at 15 minutes candle. If you are a scalper, you should go for a 1 minute candle. So it depends on what style of trading you are having. If you are a scalper, intraday scalper, you will look at 1 minute candle. If you are an intraday trader and if you are not a scalper, a swing trader, within a day you will look at 15-minute candle. If you are a options trader, you might look at 1 hour candle. If you are not an intraday player and if you are a very short term swing trader on a daily time frame, you look at daily. If you are a long term player, you will look at the weekly candle. So depending on what style of trading you are doing, you will look at the appropriate candle, but the theory remains same. The fight between bulls and bears for each 10, 50, and the concepts will remain same, whether if it is 5 minutes, 15 minutes, 30 minutes. The fight, if you are seeing, see, it looks same, right? So the fight is same. Bulls and bears will fight for 5 minutes, 10 minutes, 15 minutes, and the results will be similar. The inferences or the whatever I am sharing for a daily candlestick pattern will be also useful for a smaller duration time frame also.
okay? And a small follow-up on this: how to link volume with the candle pattern and draw
Very good question.
inference?
Very good question. See, volume, if the higher is the volume, better is the inference. So if you have a bullish candle, typically at the bottom, at the beginning of this trade, like this here, you can see 5th of August, right? It's at the bottom, the prices are turning. And if you find something bullish like this green candle and there is a high volume, that means there was a high participation, the prices are likely to go up. When it reaches to the top, high volume sometimes may be misleading. So the high volume and green candle are more significant when the prices were flat for some time. See, from here to here, you can see the prices were flat for almost 3 to 4 months. At this point, the volumes, if it increase and there's a green candle, ride the wave. Don't let the wave go. This is the time for surfing here. But if it is happening somewhere here, be cautious because already it has gone up. Take small bets. Don't go for a heavy bets here.
Thank you, sir.
Right? Thank you, Vikas. Okay, Surbi, yeah, go ahead. Surbi Batra. Yeah.
Yes, so the thing is that I am a beginner out here, so I was referring to your Sunday class, wherein you had suggested that if it is above the moving average price, you should go for buying.